Good afternoon, ladies and gentlemen. Hi, team. Uwe Jacobs, property strategist from Property Friends. I had to laugh. The software that I'm using, when it clicked over to the scheduled time, it said, it's showtime. Anyways, all good. Look, monthly update, Property Friends Musings. I wanted to comment on a couple of things. One is what I consider to be largely scaremongering in regard to interest rates. Yes, Sydney has fallen 7.2%, if I believe the stats, from the top. Melbourne has dropped 6.2%. Now, let's put that in context. We had a 30 to 40% rise, depending which location you're looking at. Who gives that Continental, excuse me for being flippant, about 7%? Yes, it's not good. We'd all like it to be constantly going up, but that ain't the truth. That ain't the real world. We will always find that there is nuances, waves in the market. So, yeah, just sit it out. I really can't see the drop to go past 10%. That's just my guess. This is a private, personal, not financial advice. All the caveats on top. I believe that there is definite intent by the RBA of spreading bad news, which filters through the media to slow the property investment market down. I'll say another reason for that in a minute when I get to the RBA decision. So I wouldn't worry about property investment dropping like a stone. It ain't gonna happen. And these galas that are forecasting 30% drop, well, they're either that they're just that galas, or I'm completely wrong, and I haven't been wrong to that extent for the last 20 years. Let's see. Time will tell. Now, a couple of other things. NDIS SDA property investment. If it's done correctly, it is a terrific way to invest. I have held a webinar pointing out the issues to look at and what the marketeers are spruiking. So ask lots of questions. When you really think about it, when you really look at it, 100% of your income, and a very substantial income, thank you very much, is government backed. So you are really looking at a recession-proof income, which is fantastic. But that income is not going to come if you don't have tenants. Between 25 and 30% of all rooms, SDA rooms, are currently vacant. So if you go into SDA investment, make sure, please make sure that there is tenants lined up, and or that the people have got excellent contacts into the industry. We don't start the build until we've got an anchor tenant, but that's just the way that we do it. And I'm, to that extent, week after next, I'm in Cairns and Townsville again. And I'm having discussions with providers, with support coordinators, and so on and so forth. It's a great way to invest if you do it right. Now, next subject, Property Friends big deals, the back room that is only for sophisticated investors, for people that have been with us for a while. We continue to work on a big deal. It's looking great. We're working together with another company that is going to rent the completed properties from us. So completely de-risked. Very nice project, very interesting project. in effect, we're looking for 4 investors. 2 have already put their hand up. So we've got 2 more spots. If a big deal is something that interests you, I stress the point, this is for sophisticated investors. So you need to be able to have $250,000 to put in, and the rest will be financed. And you need to be a sophisticated investor under the ESIC terms. If you're interested in that, send me an email. I'll send you an outline of the deal. Following that, we'll have a chat, and that's going to be a very interesting project. I've been looking forward to that for about 15 years to take that step, and we're ready now. All right, very quickly, the RBA. We were sitting on 2.35%. Expectation by 75% of the experts was 0.5% again. Now, the increase was half that, 0.25. So we are at the moment, as from 11 minutes ago, at 2.6%. Now, isn't that another proof that the RBA is cognizant of the fact that they are going too fast? Yes, they have put up another 0.25%, but not a full 0.5%. So they are obviously deeming that the pressure that they are putting on the market and that the news to slow the property market down is working. What I can't work out is, if the interest rates go up like a rocket, isn't that inflationary? So it's the cat chasing its tail. The dog chasing its tail. You know my funny English. So it's a dog chasing its tail. I mean, the very fact that there is so many increases, and we had 5 increases in, let me just double check. What did we have? We had 0.25 in May, 0.5 in June, July, August, September. So we've had 5 months running increases, and now we had 0.25. That means to me that the RBA is aware that the market is starting to slow down. So, if I hazard a guess, maybe another 0.25 in November, maybe another 0.25 in December. Initially, they're forecasted 0.5 on both months until and up to December. So let's see what happens. This is going to be interesting. So my bets are on 0.25 for the next 2 months. And then there is not going to be anything in January because everybody's on leave, including the RBI. And that means we will have another 0.5 until the end of December, and that's 3.1%. Still not staggeringly high. Now, it is prudent to calculate on a higher rate because it will go up. That is just the 10-year average is even above 3.1%. So let's make sure that we have buffers. That is my big suggestion to you. Maybe you can go for interest only, change your loans, change what you're doing. There's many ways to arrange for a easier cash flow. And last but not least, please, please, please take advantage of the possibility of doing the tax deductions on a month-to-month basis, not at the end of the year, so that your cash flow is eased. It is just a lot better for the cash flow, rather than, let's say, $6,000 at the end of the year, to get $500 every month in reduced tax in higher income. So do the tax variation schedule, talk to your accountants about that, and that will certainly help. All right. Any questions, any issues? Feel free to book a discovery call. At the bottom of our website is the link. Enjoy, have fun, and remember, you got to be in it to win it. Enjoy.